Imagine this. You're sitting at your laptop on a Sunday night, staring at a chart that's plunging red. Just a month ago, your Bitcoin investment felt like a golden ticket. Freedom, early retirement, escape from the grind. You pictured yourself paying off debt, traveling the world, maybe even quitting that job you secretly hate. But now, your portfolio is down 70%. The dreams you painted in your mind, they feel like they've been ripped away in a single swipe. And the voice in your head keeps screaming, "You've made a mistake. Sell now before it's too late." This is the brutal reality of holding Bitcoin through a crash. It's not just numbers on a screen. It's stress, fear, and the feeling that your future is collapsing in front of you. Here's the thing. Almost everyone who has built serious wealth in Bitcoin has lived through this exact nightmare. The difference between those who quit and those who win isn't about timing the market, it's about psychology. And that's what this video is about. So if you've ever felt the panic of seeing your portfolio crash, make sure you watch this to the very end because the next few minutes might just decide whether you survive the storm or walk away with regret.
The early struggle. Think back to when you first discovered Bitcoin. Maybe a friend mentioned it. Maybe you saw a headline about people becoming millionaires overnight. There was excitement, hope, curiosity. For many, it felt like finally discovering a way out of the paycheck-to-paycheck grind. The first buy is exhilarating. You feel like you're stepping into the future of money. But soon after, reality hits. The price doesn't just go up, it crashes. Suddenly, that $1,000 investment is worth $700, then $500. It's not just the money, it's the emotional punch. You question yourself, am I stupid? Did I fall for a scam? Why didn't I just stick with my savings account? And because nobody talks about how normal this cycle is, you feel alone. Everyone around you seems either dismissive, Bitcoin is a scam, or smug, I told you to sell. That isolation makes the struggle even harder. This is the early stage where most people quit. They came for quick riches, but the pain of volatility breaks them before they ever get to see the reward. The hidden traps. So why do so many people fail at holding through a crash? It's not just the volatility. It's the hidden traps our psychology sets for us. The first trap is obsession. Checking the price every 5 minutes. Refreshing apps like it's life or death. Every dip feels personal, like the market is punishing you specifically. This obsession magnifies small moves into emotional earthquakes. The second trap is comparison. Maybe your friend bought at 10K and is still in profit, while you bought at 60K. Or maybe someone on Twitter posted screenshots of their gains in some other coin. Suddenly, your decision feels like failure. The third trap is panic selling. In the heat of fear, you tell yourself, I'll sell now and buy back lower. But almost always the market rebounds before you act. You lock in losses, while others ride the recovery. And finally, there's the illusion of control. We think we can outsmart the market, time every peak and bottom. But the truth? Even professionals fail at this. These traps aren't just financial, they're psychological. They make rational people act irrationally. And unless you recognize them, they'll quietly drain your wealth. Not because Bitcoin failed, but because fear won. The breaking point. Every investor eventually reaches what I call the breaking point. It's that gut-wrenching moment when you're staring at losses so steep, panic feels like the only logical choice. For some, it happens when they've lost half their portfolio. For others, it's after weeks of watching red candles with no relief. The voice in your head whispers, just sell. At least you'll stop the bleeding. Let me tell you a story. In 2018, during the brutal bear market, Bitcoin fell from nearly $20,000 to just over $3,000. Investors were wrecked. People who had sworn they would never sell finally gave in.
One man I knew sold everything at $3,200, swearing he'd never touch Bitcoin again. 2 years later, Bitcoin broke $60,000. His pain wasn't just financial, it was emotional. The regret of selling at the bottom haunted him more than the crash itself. The market doesn't just test your money. It tests your patience, your conviction, your identity. And the ones who survive the breaking point aren't the smartest or the fastest. They're the ones who build a stronger psychology. 3 core strategies. So how do you strengthen your psychology? How do you hold through the chaos without breaking? It comes down to 3 core strategies. Strategy number 1, reframe volatility. Instead of seeing crashes as disasters, see them as the price of admission to long-term gains. Every great investor in stocks, real estate, or Bitcoin has endured downturns. The higher the potential upside, the rougher the ride. When you reframe volatility as normal, it stops feeling like failure. Strategy number 2, anchor to fundamentals. Bitcoin isn't just a number on a screen. It's decentralized money. It's scarce. Only 21 million will ever exist. It's censorship-resistant, borderless, and global. These fundamentals don't vanish just because the price drops. Anchoring to the why behind your investment reminds you why you believed in the first place. Strategy number 3, create guardrails. Most panic happens in the heat of emotion. Guardrails protect you from yourself. Set up automatic investments, dollar cost averaging every month. Move long-term holdings into cold storage so you're not tempted to sell. Create personal rules like, I don't sell unless the fundamentals change. Systems beat emotions every time. These 3 strategies don't guarantee wealth, but they do guarantee survival. And survival, in investing, is half the battle. Something powerful happens when you survive your first crash. The next one doesn't feel quite as terrifying. Think of it like pushing a flywheel. At first, it's heavy. Every push feels exhausting. But once it starts spinning, momentum takes over. Each crash you endure builds your resilience. Each recovery strengthens your conviction. The psychology of momentum is simple. Confidence compounds. Once you've seen Bitcoin fall 70% and then rise 300%, you stop panicking as easily. You stop reacting to headlines. You start thinking long-term. And that shift is where wealth is built. Because while most people spend their energy entering and exiting the market, the ones who hold, the ones who let momentum carry them, are the ones who actually capture the rewards. At some point, you stop thinking like a trader and start thinking like an investor. Traders obsess over the next day, the next hour, the next candle. Investors think in decades. Traders ask, what's the price now? Investors ask, what future am I buying into? This shift is everything. When you move from chasing fast money to building long-term wealth, crashes lose their power over you. They stop being threats and start becoming opportunities. It's the same mindset that separates middle-class savers from wealthy investors. One plays not to lose. The other plays to win by holding conviction when others panic. That's the psychology Bitcoin demands. Transformation vision. Now imagine this. You held through the crashes. You ignored the noise. You trusted your systems. And years later, you wake up to see Bitcoin not just recovered, but reaching levels people once thought impossible. Your portfolio isn't just numbers anymore. It's options. It's freedom. It's the ability to say yes to opportunities, to family, to life itself. The transformation isn't just financial. It's psychological. You become someone who can handle chaos without breaking. Someone who doesn't get shaken by fear, someone who builds wealth not by luck, but by conviction. And when people ask, how did you do it? You'll smile knowing the real answer. You mastered your psychology.
Call to action. Here's the truth. Crashes are not the end of the story. They are the test. Every time Bitcoin crashes, two kinds of people emerge. The first group panics, sells, and walks away with regret. The second group holds, learns, adapts, and comes out stronger. Which group you belong to is entirely up to you. So let me ask you, when the next crash comes, and it will, who will you be? The one who panics, or the one who stays calm and focused, knowing the storm will pass? If you want to be in that second group, the group building long-term wealth, not chasing short-term noise, then commit today. Build your systems, anchor to your why, and reframe volatility as the cost of greatness. If this video resonated with you, drop a comment below. What's the one psychological trap you've struggled with most in your investing journey? And if you're ready to join a community of people thinking long-term, hit like, share this with a friend, and subscribe for more. Because at the end of the day, Bitcoin won't test your math skills. It will test your mindset.